One thing the debt ceiling crisis has reiterated that is just one of those hard and fast rules in the market is that markets hate uncertainty. So, as you can see here from the chart, right, we've seen over the last number of weeks, well, a couple of weeks, but particularly the last week or so, the MBS, this is showing you the mortgage-backed security bond market. You can see the price has really fallen off a cliff, which means rates went up quite a bit, due mostly over the past week or so to uncertainty, right? Uncertainty in the markets, uncertainty about what was happening with the debt ceiling talks. Now that it appears a compromise has been reached to some degree anyway, and some sort of framework in place to actually get something moving forward to avoid a debt ceiling breach, if you will, it appears at this point, again, we don't know for sure because it hasn't officially passed the House and Senate, but we're on the right track here. And as far as the market is concerned, there's forward movement and there's less uncertainty today than there was last week. And so what do we see as a result? Well, this chart shows you the mortgage-backed security price. The price was falling and then fell fairly dramatically last week as the debt ceiling talks completely stalled. And there was great concern that that was going to cause even more upheaval in the bond markets and, of course, stock market as well, but mostly bond markets and rates. And then when there appeared to be some sort of consensus coming out Friday, we've seen a bounce back, right? We've seen an improvement in pricing, as you can see today, and hopefully that holds and things will move forward in a way that is productive and, of course, not just good for one party or the other, but good for the country as a whole as we move forward through the rest of this year and into the next few years, that we can find ways to move forward to cap spending, of course, and find ways to be able to accomplish those things we need to accomplish as a country to have stability. But that's really what the story is today, right? We've seen a bounce back on mortgage-backed security bond prices. The stock markets, as you can see up here on this chart, S&P 500 index is pretty much flat, but the 10-year Treasury, which is a leading indicator of where mortgage rates go, has improved substantially, the yield dropping nine basis points. So good news all around. We're hopefully at the worst of the rates again. Now, as you can see, going back here, you can see that rates are kind of in the range. I'll go back 6 months so you can see this a little bit better. But you can see that mortgage-backed security bond pricing is kind of back where it was the beginning of March, end of February, when we had the highest rates of the year. We're kind of back in that range now. So hopefully things will continue to move forward in a positive way. We continue to see inflation come down. The jobs report comes out later this week, which for last month, which if it continues to indicate a softening economy, that could also boost bonds, improve interest rates as we move forward, and hopefully see these prices continue to rise and move forward in a meaningful way and gain back some of the losses we've had over the past 3 weeks. That's the hope. That's the update for today. Have a wonderful week.